All right. All right, guys, this is Julie, post-market wrap-up, September 14th. Let's take a look first at the E-mini. It had a down and flat and down day. Started out in Globex, flushed down, came into the open, and sort of continued down until lunchtime, moved back to my volatility band, flattened out, broke through, leading me to believe that there might be an upside surprise, but then it failed and came down, and we're closing on the low. And not to get too fundamental on you, I'm going to try to avoid doing that, but I know that there were news releases all over the place today saying $300 billion are expected to come out of the market in the next couple of weeks. So everyone is like 300. Let me see if I can find one of those articles. Everybody warning traders that 300 billion outflow from markets expected. Yeah, here, 300 billion exodus. Look at this. That was published on the 13th, updated today. So, they're expecting everyone to pull their money out. So when they're printing stuff like that, of course the market's going to plummet. I mean, who wants to sit there and hold money in an account when they're reading that crap? So, I mean, I guess, self-proclaimed prophecies, right? So, the market went, down. Not surprising. So it's a good thing I know how to trade down with my algorithm. That's what I wanted to show you. Don't take the tops or bottoms. Take the meat of the move and set up your candle to take advantage when price is moving. Now these did not work out. So these worked out great, but that was overnight. And there's a lot to be said for overnight trading. They do make a lot of money overnight trading. I think that was yesterday, wasn't it? So where's today? Right here. Here's today. Sort of bottomed out, flipped up. Let me put this on entry 1 just to show you that my algo will go up and down. I always prefer to tell it I only want to go one direction, but it will trade both directions. But when the market does start moving, the algo will, of course, participate, and that's what I want. When I'm seeing that the market is expanding its range and I know the direction I want to trade, I just take the trade. And look at the volume coming into the market. So crude sold off today. It did a little high run right after the report was released and then crashed down. Report came out. Market rallied up right up to the yesterday VWAP and daily, or I guess that's the weekly upper deviation band, and then sold off, went to a level I had put on my chart, bounced, and then broke that level, came down to the yesterday 200. So that weakness surprised me in crude. And at first I thought 44 was going to hold, but it did not. It broke. And here's the algo. Put this back on short. And you see how it will wait, stay out of the bull flags. and get back in when the market is moving in the direction you want it to be in. How sweet is that? Stay out of the bull flags and take the downturns when they come. Very, very sweet. I mean, that's as best as you can do. I mean, best as I can do. So I'm working on it. I'm going to be 100% Blackbird going forward. So only trading the signals that come off of my charts so that I can develop my track record individually and with the managed futures account. This is so far in the month from September 1st through the 14th. I've had a really up and down month though. It's not been that good. As far as I'm not happy at all. I've had like some horrible days. Monday and Tuesday were not good at all. So, horrible days. But overall, I'm getting there slowly but surely, building a foundation. The key for me is getting, hitting these reversals, and when the market sets up for movement, and leaving room, if I get knocked out of a trade, to get right back in. That's so critical, because you can make up those little one-off misses by capturing a deeper pullback. So the deeper pullbacks are really what I'm interested in. I do not like taking these bottom signals. I really do prefer these upper ones, but I can control the misses with risk management, and that's what I'm going to be talking about so much coming up next week when I do my Blackbird presentation on the 21st. If y'all haven't signed up for that presentation, I am going to trade the FOMC minute released live using my algorithms, and show you Blackbird and talk about risk management. The most 100% important aspect of trading is risk management, and that's why I love Blackbird. I can control my risk across however many Blackbirds I have running. I can layer in profitable trades and stagger them in and take advantage of positioning moves that are winning. Everything, my templates, I can save them in Blackbird so I can pull them out. Everything will be pre-programmed, so I can manage my volatility, expand it or contract it, have algos ready to go. So trade designing is really managing risk and volatility. The signals are going to be the same, and my methodology is the same. It's just managing risk and volatility. That's what it is. And I'm learning. I am learning. So this is all pretty new. The Blackbird's new. My algo's new. And the program's new. So come and watch me as I learn and grow and develop through this process, and hopefully become very good at it. That's the goal. So thank you so much. Again, here is the hypothetical performance disclaimer and risk disclosure on the website. Please do look at those before you consider putting your money at risk in the market. Thank you so much. I'll have a wonderful evening. Bye-bye.